So you want to start investing but don't know where to start? First things first, let's talk about asset classes. When people talk about investing, they're usually talking about buying assets. But what exactly is an asset? An asset is anything that has value and can be bought and sold. Some examples of assets include stocks, bonds, real estate, and even art. Each of these assets fall into different categories or asset classes. The three main asset classes are stocks, bonds, and cash. Stocks, also known as equities, are a type of investment that gives you ownership in a company. When you buy a stock, you own a small piece of that company and have the potential to make money when the company does well. Bonds, on the other hand, are a type of loan. When you buy a bond, you are lending money to a company or government. In return, they promise to pay you back the money you lent, plus interest. Bonds are considered less risky than stocks, but also have lower returns. Cash is the most liquid asset class and the safest option. Cash is money in your bank account or cash on hand. It is the most liquid of all assets because you can use it instantly. Now that we know about the different asset classes, let's talk about returns. A return on investment, or ROI, is the money you make or lose on an investment. It's typically expressed as a percentage. For example, if you invest $100 and make $10, your ROI is 10%. Keep in mind that different asset classes have different expected returns. Stocks have the potential for higher returns, but also come with higher risk. Bonds have lower returns but also lower risk. So how do you decide which asset class to invest in? Well, it all comes down to your personal preferences and goals. If you are young and have a long time horizon, you may be comfortable taking on more risk in exchange for higher returns. If you're nearing retirement, you may want to focus more on preserving your capital and opt for lower risk investments. Follow Legend Finance for more educational content on personal finance and in-depth tutorials. Stay tuned for more of our videos. Now that you have a better understanding of asset classes and returns, let's talk about how to actually start investing. The first step is to figure out your investment goals and risk tolerance. Do you want to grow your wealth over the long term? Or are you looking for more short-term gains? How much risk are you comfortable taking on? Once you have a clear idea of what you're looking for, you can start researching different investment options. One way to invest is through a traditional financial institution, like a bank or a broker. Banks offer a wide range of investment options, from saving accounts to mutual funds, and they often have financial advisors who can help you make informed decisions. Another way to invest is online. There are a variety of online brokers and platforms that allow you to invest in stocks, bonds, and other assets. Some popular options include E-Trade, TD Ameritrade, and Robinhood. These platforms allow you to buy and sell assets online with ease. When it comes to trading equities or stocks, you can buy and sell them through an online broker or a traditional financial institution. You will need to open an account with the broker, which typically involves providing personal information and passing a suitability test. Once you have an account, you can start trading by placing buy or sell orders for the equities you're interested in. Trading refers to the buying and selling of assets in the financial markets. It's a way to make money by buying low and selling high. By buying and selling stocks, you can make money by taking advantage of fluctuations in the market. Keep in mind, trading has a higher risk than traditional investing. It is important to do your own research and to understand the risks involved. Bonds are another important asset class that can be a great addition to any investment portfolio. Bonds are essentially loans that are issued by companies or governments. When you buy a bond, you are lending money to the issuer, and in return, they promise to pay you back the principal plus interest. Just like stocks, bonds can be bought and sold on financial markets. They can be a great way to add diversification to your portfolio and to potentially earn a steady stream of income through the interest payments. Bonds can also be a good option for investors looking for more stability and lower risk. They generally have a lower potential return than stocks, but they also have a lower volatility and are less affected by market fluctuations. There are different types of bonds, such as treasury bonds, municipal bonds, corporate bonds, and others. Each one has its own characteristics, risk, and potential return. When buying bonds, it's important to consider the credit worthiness of the issuer. This is a measure of their ability to pay back the bond. U.S. Treasury bonds are considered to be among the safest bond investments because the U.S. government has the ability to tax its citizens to pay bondholders. You can buy bonds through a traditional financial institution like a bank, or you can buy them through an online broker or bond fund. Just like stocks, it's important to research the bond you're interested in and to understand the risks involved. However, bonds can be a great way to add stability to your portfolio and earn a steady stream of income. Cash is considered the most liquid of all assets. It refers to physical cash or cash equivalents, such as money in a bank account or cash on hand. It is considered the safest option among the asset classes, as it has minimal risk and can be used immediately. When it comes to investing cash, one of the most common ways is to deposit it into a savings or checking account at a bank. Banks offer a variety of options, such as high-yield savings accounts, money market accounts, and certificates of deposit or CDs. That can help you earn a bit more interest on your cash. Another option for investing cash is through short-term, low-risk investments such as treasury bills or short-term corporate bonds. Keep in mind that cash investments typically have the lowest returns of all asset classes, but they also have the lowest risk. Cash is often used as a short-term investment or as a way to provide liquidity for other investments. In summary, cash is physical cash or cash equivalents that you can use immediately. It can be invested in a bank account or in low-risk, short-term investments like treasury bills or short-term corporate bonds. It has the lowest risk among all asset classes, but also the lowest potential return. So as you have just learned, there are several ways to start investing. You can go to a traditional financial institution like a bank, or look online for an online broker. And for trading equities, you would open an account with a broker and make your trades on their platform. It's important to remember that investing always comes with the risk, and it's important to do your research and understand the risks involved in any investment you make. But with the right information, you can make informed decisions and potentially build your wealth over time. Investing can seem overwhelming at first, but don't worry. You don't have to be a Wall Street pro to start investing. The most important thing is to start somewhere. And remember, investing is a marathon, not a sprint. If you have any questions or want more information, please let us know in the comments. If you are interested in learning more about investing, like the best way to invest in equities, go ahead and follow Legend Finance for more exclusive content on personal finance. We will link all of our videos so you can learn more. Thank you so much for watching.